Welcome back to Investing Talk podcast. Today we're taking a close look at Acurx Pharmaceuticals. They're a company making some interesting moves in the fight against superbugs. Our mission here is really to pull out the most important bits of info, give you a clear picture of where Acurx stands. We'll get into their unique approach to new antibiotics, talk about their recent clinical results, and of course, look at the financials and the risks involved. It's all about getting you informed quickly and thoroughly. Before we jump right in, if you find these explorations valuable, please do remember to subscribe, like, and comment. It really helps us create more of this content for you. And if you're feeling generous, maybe consider buying us a coffee. Every little bit helps keep these insights coming. Okay, let's unpack Acurx Pharmaceuticals. So to start us off, can you tell us a bit about Acurx? What kind of company are we looking at here, and what's their big idea?
Okay. Acurx is what we call a late-stage clinical biopharmaceutical company. Their main thing is developing a completely new class of antibiotics, small molecule ones. They're designed to tackle those really tough-to-treat bacterial infections. What's really interesting is their mechanism. It's novel. They use something called gram-positive selective spectrum, GPSS for short. Basically, it specifically targets and stops bacteria from replicating their DNA. It does this by blocking a particular enzyme, DNA polymerase IIC.
That sounds very targeted, like a precision strike almost.
It is, yeah. The idea is to be very specific to certain types of harmful bacteria.
So which infections are they mainly going after with this approach?
Their focus is definitely on high-priority pathogens. The lead candidate, that's ibizapolstat, is aimed at Clostridioides difficile infection, C. diff. That's a major problem. But the pipeline doesn't stop there. They're also looking at threats like MRSA, methicillin-resistant, Staph aureus, and VRE, vancomycin-resistant enterococcus, even drug-resistant Streptococcus pneumonia. And they've got preclinical work on things like inhaled anthrax, too. When you think about the bigger picture, with antibiotic resistance rising everywhere, there's this huge, urgent need for new therapies. So their work is, well, incredibly relevant.
Right, the resistance issue is massive. So ibizapolstat for C. diff is the main horse in the race right now. Where are they in the development process with that one?
That's the one furthest along. Ibizapolstat is officially phase 3 ready. They're already planning international clinical trials. That's a very advanced stage for a potential new drug, a crucial step.
Okay, phase 3 ready. That gets really interesting. What data actually backs that up? What gives them the confidence to move to phase 3?
Well, a really significant piece of news dropped just recently, June 17th, 2025. They published their phase 2b clinical trial data for ibizapolstat, and it was in the Lancet Microbe.
Oh, the Lancet. That's a top-tier journal.
It is. Very reputable. And this study was specifically on treating C. diff. The results were pretty striking. They reported a 94% clinical cure rate in that trial.
94%. Wow. That sounds incredibly high, especially for C. diff. How does that really stack up against what doctors use now?
It's a very strong number. A cure rate that high definitely makes ibizapolstat look like a serious contender against current standard treatments, like vancomycin. But there's more to it. Back in October 2024 at ID Week, some independent researchers presented data. They confirmed the efficacy and safety looked comparable to vancomycin, but crucially, it also showed promising sustained cure rates and lower recurrence over 3 months after treatment. That recurrence part is huge for C. diff patients. It's a real differentiator.
Ah, the recurrence. That's often the kicker with C. diff, isn't it? People get better, then it comes back. So lower recurrence is a big deal.
It really is. For patients stuck in that cycle, it could be life-changing.
So what does getting published in the Lancet Microbe, having these results out there, what does that do for the company's standing and for the drug's potential, market-wise?
It's a massive boost to credibility. Publication in a journal like that carries a lot of weight with clinicians, the ones who'd eventually prescribe it, and also with investors. It basically validates their science in a very public, peer-reviewed way. Strong results like these, especially this late stage, usually make analysts more positive. It suggests a better chance of getting regulatory approval and eventually being successful commercially. If it does get approved, it really could shake up how C. diff is treated.
Okay, the clinical side sounds very promising. But let's switch gears a bit. Let's talk money. Acurx is doing exciting science, but what's the financial picture look like for a company at this stage?
Right, that's always the other side of the coin in biotech. As of the first quarter of 2025, Acurx doesn't report any product revenue, which is completely normal for a company like this. Their main drug isn't on the market yet. It's still in trials. So no sales.
No revenue coming in usually means they're spending money, right? Burning cash. Can you give us a snapshot of their financial health, like their recent losses?
Correct. They are operating at a loss. For Q1 2025, their net loss was reported at $2.1 million. That works out to about 0 to 11 cents per share. Now, that's actually an improvement compared to the same quarter last year, Q1 2024. Back then, the loss was $4.4 million, or 0.28 cents per share.
So the loss narrowed. Why was that?
It seems to be mainly due to lower operating expenses. They spent less on R&D and also on general and administrative costs during that period. And because they have negative earnings, you can't really calculate a meaningful PE ratio. Again, standard stuff for a pre-revenue biotech.
If they're not making money from sales, how do they keep the lights on? How are they funding these expensive clinical trials?
Primarily, they raise money by selling shares through equity offerings. They haven't taken on significant debt. For instance, back in January 2025, they closed a registered direct offering that brought in $2.5 million. So as of the end of March 2025, their cash balance was sitting at $4.6 million, reflecting that recent fundraising. Their free cash flow is still negative, obviously, because of the ongoing R&D spend and no revenue. That's just the reality for biotechs at this stage. They'll need to keep raising money periodically through equity to fund operations during the trials. So yes, ongoing net losses are expected for the foreseeable future, really until they can get a product approved and start selling it.
Okay, that makes sense. Equity raises are the lifeline. So pulling it together, promising science, typical pre-commercial finances, what are the big opportunities ahead for Acurx, and what are the major risks investors should be aware of?
Let's start with opportunities. Those strong Phase 2b results are definitely the biggest one. They put Acurx in a good position for the Phase 3 trials. It also might make them more attractive for, say, a partnership with a bigger pharma company, or maybe even an acquisition down the line. The need for new antibiotics is real. Another positive point is the regulatory feedback they've gotten. Both the European Medicines Agency and the FDA seem aligned on the Phase 3 trial design for international studies. If the trials go well, that alignment could potentially speed things up on the path to market. And as we mentioned, the data suggests differentiation from current drugs, which helps too.
Okay, those are some clear upsides. What about the flip side, the risks?
The risks are also significant, no doubt. Top of the list is clinical and regulatory risk. Everything hinges on ibezapolstat succeeding in Phase 3 and getting approved. And we have to be realistic, clinical trial failure rates, especially in anti-infectives, are high. Many drugs don't make it through Phase 3. Then there's the funding risk we just talked about. They rely on equity raises. That means potential further dilution for current shareholders might be needed before they can generate revenue. And even if they get approval, there's still reimbursement uncertainty. Will payers cover the drug readily? That depends on the final data and cost effectiveness. So several hurdles remain.
High stakes, high reward, but also high risk.
Got it. How is the market generally feeling about Acurx right now? What's the sentiment out there, especially after the recent news? Well, the stock price has shown moderate volatility. That's pretty typical for biotech companies at this clinical stage, where news flow about trials or regulations can cause swings. Over the last year, the overall trend was kind of sideways to slightly down, partly reflecting maybe some weakness in the broader biotech sector. But you definitely saw spikes in the price when there was positive news, like about Phase 3 readiness or successful funding rounds. After that Phase 2b publication in the Lancet Microbe, you'd typically expect to see, and likely did see, increased trading volume and some upward momentum. Good news tends to attract attention. If you look at social media, you sometimes see retail traders talking about Acurx, often viewing it as maybe an under-the-radar kind of opportunity. They generally acknowledge the high risk, but there's definitely optimism about ibezapolstat's potential, sometimes even speculation about a possible buyout.
Interesting mix of caution and optimism then. So for our listeners who are tracking this company, what are the next key things to watch for? What are the main catalysts on the horizon?
The absolute main things to watch are the start and then the enrollment progress of those international Phase 3 trials for ibezapolstat. We expect those to kick off within the next year or so. That's the big one. A successful Phase 3 would be truly transformative for the company.
That Phase 3 start is clearly the critical next step. So boiling it all down, what's the ultimate takeaway for someone listening right now and considering this company?
I think the key takeaway is that Acurx remains a speculative investment. Its future is highly, highly dependent on the success of one drug candidate, ibezapolstat. Success means successfully completing Phase 3, getting regulatory approval, and then commercializing it effectively. Failure at any of those steps would be a major setback. It operates in a challenging field, the antibiotics market, which has this urgent need, but also faces significant hurdles. It's a classic early-stage biotech story in many ways, so investors really need to watch those upcoming trial milestones very closely and understand the binary nature of the risk.
So, to recap our exploration today, Acurx Pharmaceuticals definitely has a compelling story. They're tackling drug-resistant infections with ibezapolstat, and the clinical results so far look very encouraging. Real innovation there. But as we've discussed, the financial path is still that of a pre-commercial biotech reliant on trial success and future funding. It's that typical high-risk, high-potential profile we see often in the sector. And as you think about Acurx, maybe zoom out for a second. Consider the bigger picture of developing new antibiotics when resistance is such a growing global threat. How vital is this kind of work? How many more companies like Acurx do we need? And how might their successes or failures really impact global health over the next 10, 20 years? Something to ponder. That wraps up our look at Acurx Pharmaceuticals. Thanks for joining us on this exploration. If you want more analyses like this, please do subscribe, like, and drop a comment. Let us know what other topics you'd find interesting. Until next time, stay curious and keep learning.